guest speaker joining us today. Ms. Adrienne Twigg is going to be joining us on the HR Employment and Compliance Specialist at Ericksen, and this is a special program we put together for you all regarding risk management as an employer and a dental tenant. So as we do many of these CE courses, as Adrienne and I have done a number over the years, one of the core feedback we get from our clients is, the lack of training, experience, or help on the business side of dentistry. And one of the difficulties continuously that we hear is the challenges regarding all the difficulties it is to be in a dental practice today, operate a dental practice today, to start a dental practice today is far more difficult today than it was 5 years prior. Then it was 5 years prior to that. Then it was 5 years prior to that. And needless to say, it's very difficult. So certainly for each and every one of you joining us today, we know how difficult it is. And the purpose of this is to help give you some good key practical tips and tricks, both regarding one of your most important assets, which is your practice, and the location of that practice through the dental office lease, whether you own or lease your space, as well your other largest asset, which is your team and your people, which is very important that we're keeping up to date with current regulations, current policies, to make sure that you're in compliance, right, and have all your bases covered. So what I wanted to do today is just get a quick sense of the room. So all of you should be able to see a quick evaluation survey question in front of you. Thank you. Feel free to click through to find out what stage of your career you are in. Are you about to embark and start your first practice? Are you about to open an additional practice and relocate? Are you in the mid-career, currently looking towards a long-term transition? Or are we looking gleefully out the window and hoping to transition within the next 5 years? So for those of you just joining, I'll re-pull this up afterwards, but feel free to have a quick link here just to get a good sense. Are we early stages in our career? Are we looking to add locations? And or are we renewing the lease and or planning to transition in the near future? All right. Okay, thank you so much for your votes. I'll pull that up afterwards as well. And let's jump in, shall we? So we've got lots of great content to touch on today. My name is Eric Pook. I'm the Managing Director here at the Healthcare Leasing team at Cirrus Consulting Group, where our core focus and expertise over the past 25 years has been exclusively around helping to represent dentists in the negotiation of their dental office lease. So we were founded by dentists now, for dentists over 25 years ago with that core focus. What we found over the years is that one of the largest and most unrepresented groups in the negotiations are dental tenants. You spend the most to build out a new dental practice, right? Yet historically negotiate the least. And therefore part of the core objective today is to give some good practical tips and tricks, help to identify some of the core components of the lease agreement, as well as how to mitigate some of those both financial and legal risks. And then part two will be with Adrienne going through some HR core components. On that note, a little bit more about Cirrus is that we are the only firm of our kind in North America. So we are a healthcare and dental specialized representation firm. What does that mean for you? It means that our team of attorneys and negotiators and former brokers, as well as former landlord employees that have worked for some of the national landlords, we've hired them from the dark side purely to help make sure that we are able to represent dentists throughout North America in the negotiations or renegotiations of their dental office leases. So we're not brokers, we're purely a tenant representation firm. We never charge the landlords any commissions. We're always working on our clients' behalf to make sure that they get the best possible negotiated deal, especially for how long the average dentist spends in their current practice. So we do hundreds of these continuing education courses throughout the country, and really the structure of our firm is the most unique. So we have in-house attorneys that are exclusively doing 70 to 80 dental leases per year, so the experience is truly second to none. We have a paralegal and dental real estate analytics team to help ensure that we are able to pull up really comparable rental rates, detailed title searches, etc., all through our proprietary database and software to ensure we know exactly what local rates are and beyond. In addition to that, of course, we speak at many of the different conferences, Dental Business Institute, national conferences, and beyond. No shortage of fantastic clients and letters of thanks that we've received over the past few years. And as I'm sure you've noticed from our Google reviews or otherwise, truly our client experience is second to none with all 5-star reviews over the past 12 months. I wanted to also run through today a bit of a market update. We get lots of questions from doctors, dentists, and veterinarians throughout North America asking about, am I paying fair and equitable rent? Well, one of the core components here is to look at what the market is doing. And as we may know, we're in a very hot market. And for those of you on the webinar today that have started a lease agreement 10 years ago and we're coming up for renewal, or 5 years ago, we should be very prepared and very proactive because the rates are continuing to increase and vacancies continue to decrease. So from that perspective, right, as you can see here from New York, right, large amounts of fluctuations in vacancies, yet rental rates continue to increase and skyrocket. In addition to that, we have Austin, Texas, right, where we've done some recent seminars. Here you see a more traditional inverse curve, so as vacancy rates dip now towards the 4% mark. Price per kilowatt, the amount of rental rates have increased from $20 per square foot upwards of $27 per square foot. Similar story through Chicago, right? Vacancy rates are a little higher, but rental rates have also, percentage-wise, increased dramatically. So if you're throughout the West, right, as well as in many major urban centers, right, rental rates have continued to increase at quite a fantastic rate. As the next one coming up here, we have Orlando, Florida. We were recently at a national sales meeting down there, and here a little more traditional, flat line. And then looking through to the Bay Area in California, so for those on the line joining us from the West Coast, right, 9 a.m., perfect opportunity to be very concerned as to what your upcoming renewal rates will be. Right? We have seen vacancy rates now dip below the 1% mark. That is unfathomable. So as a direct result, it's important that for those in those major markets, be aware of your surroundings, and as a benefit to all those on the call, we'll be doing a complimentary lease review and real estate report. So we're happy to pull up this type of data exactly for your business, your location throughout the continent. So the purpose of today's webinar is really surrounding the importance of the dental office lease. We want to touch on some key terms and conditions, as well as we look forward to your upcoming new start or renewal or new location, as many of you are looking to do and expand your dental empires in an emerging DSO or group practice space, to help make sure that you're looking at the lease a little bit differently. Most of the growing DSOs throughout the country are really focused on using the lease as part of their core due diligence. It's impossible to evaluate a practice unless you know that there is term and predictability and continuity for that revenue. And without that in place, makes the value very, very different, right? So look at the lease, look at the term of the lease, look at the transferability of the lease, especially for those looking to add a new location. The next piece here, we always get lots of requests. Well, I own my space, so I'm good to go. So as you're looking to add a new point for many of the people on the webinar today, right, be cautious, because when we look at it, there's a lot of pros and cons. Back to the individual practice, adding a second or third point, or even some of the emerging groups out there, there's a core focus of using that capital exclusively for building out new dental practices. So when looking at even some of the largest groups, they do not own their own real estate. Why? because the value of that capital is far better served into creating and building out successful, profitable dental practices. So be aware going in and making sure that you've got someone to walk you through the pros and cons of both. Definitely both can have some great advantages. In both cases, though, you do need a dental office lease. Let it be from a liability, let it be from a cost perspective to separate your corporation that owns the building, the corporation that owns your practice. There needs to be a lease in place, not only for taxation, liability, but also to increase the value of your building, as well as increasing the value of your practice. So many doctors call us as they're trying to sell a practice. They call up a PPT member for an organization or otherwise evaluate the practice. They get the valuation done, and they suddenly realize, whoops, I haven't been paying myself rent, I haven't been delineating costs, and now the financials are a mess. It's very difficult to assess what the true profitability are because most doctors are wanting to retain the real estate before transferring, and as they go into transition, they want that ability to have that passive form of income. So in both cases, important to have a dental lease in place because when you go to sell your practice, that is the agreement that is going to be transferred on. And it makes it so much easier than having a lease agreement that you've just created. That's going to be a big red flag for the due diligence for lending partners, for the doctor looking to acquire your space. So as we do these lectures, as Adrienne will attest throughout the country, one of the core components here, looking at it, let it be throughout Canada or the U.S., is when we talk about what is a lease. Right? And when we talk about a lease, when we look at it from that perspective, I was just involved with a client on the West Coast about to sign a $20,000 per month lease. And when we look at it from that perspective, over the average term that doctors are staying in their locations now, which is upwards of 27.2 years, it ultimately represents a check. And unfortunately, most of the time, we just look at it over the first month or the first year. We only look at page 1 of the lease agreement, not the other 30 to 40 to 50 pages that the landlord's attorneys have done. So the first page of that lease really focuses on whom, right, I'm writing the check to, who is writing the check, how much is it for, and how often are we sending it. And when we look at the cost, right, for those of you that selected that you're either renewing or adding a new location or about to buy the first practice, please do the quick math on it. Back of the napkin, monthly payment multiplied by the term, multiplied by some annual increases to average that out over the next potentially 20 plus years. This is a multi-million-dollar commitment in terms of what you're committing to the landlord. And if you could go back, for those of you that are already in a lease, to go back in time, would you have negotiated differently knowing how many hundreds of thousands of dollars you would spend to the landlord? So many times the doctors unfortunately underrepresent themselves or don't ask for what they truly do, which is when you're offering a 10-year term with 2 5-year options, very important that you leverage that. That is music to the landlord's ears. So being able to help protect yourself, let you be in San Diego or in Alaska, right, Anchorage, it's important that you look at that upcoming renewal or new start and plan accordingly and make sure that it is providing everything that you need. Because what do we need as great practitioners? Well, a couple of core components. First of all, the lease is your business. Your business is your location. And therefore, it creates the either rock-solid concrete foundation for your practice or a crumbling shell that can cost tens of thousands of dollars down the line to fix, let alone a significant amount of risk. Also, it's a massive build-out. These days, it's not uncommon to see 150, 250. Some are upwards now in some major centers, over $300 per square foot in construction costs alone. If you've ever had to relocate a practice, you know what I'm talking about. Be very focused, be very prudent, and help to make sure that before you sign that letter of intent, make sure that You're aware of the total cost. Make sure that you're conveying the value you're bringing to the landlord, right, and never go underrepresented. And last but not least, the practice sale. For those of you that selected selling or transitioning your practice, the number one reason why deals fail throughout the country today is because of the lease agreement. You are unable to sell your practice without transferring the lease. And therefore, as you go towards transitioning, critically important that you've negotiated the lease first, right? When you call up the landlord and said, hey, good news, I've just sold my practice to Dr. Smith. Oh, great, how'd you do? Fantastic, I got 80% of collections. Great, fantastic, good news, right? The landlord is going to be far less open to removing personal liabilities or continuing liabilities at that point if had you started the process 5 or 10 years prior. So if you're contemplating selling in the future, critically important you have your lease professionally reviewed and you're aware of what your responsibilities are post-sale and how much control the landlord has upon that sale. So let's touch on the sale for a moment, if you will. What are the 3 sellable components of your practice? Well, the easy one is equipment. Right? Hey, I spent $150,000. I got some great Pelton & Crane equipment and islands and great facilities. I got some great ADEC components as well. Now the next question is, what's the depreciated value and how much can I get for that equipment? The second is the goodwill. How many active patients? What type of predictable revenue are you going to be transferring and are you selling? Because that's the value to the new buyer. That's why they're not doing a de novo. They're coming in so it's turnkey and they pick up right where you left off. They'll do chart audits. They'll help to assess to see how much work is left in, right? Have you been incredibly prudent in doing a lot of the recommended work, or is there still a lot of work left remaining? That will help to value. And of course, last but not least, the most important component here is the dental office lease. And that can impact 100% of your practice value, because if the landlord doesn't approve, or if you have a clause in your lease that when you go to assign or sublet, for those of you following along on your lease, the landlord, in many cases, has the option to even terminate the lease just for asking to transfer the lease to a new doctor. Therefore, in 99% of leases out there, the landlord has an extreme, if not complete control as to whom they can approve or disapprove, or in some cases, terminate your lease just for asking and engage in direct communications with your buyer. So can you imagine that? You go to sell your practice, you'll go to the landlord, you negotiate all the back and forth, you get the practice broker, you pay all the money, right? You get to the 11th hour and the landlord says, you know what, I'm not too sure about that new doctor. You're underpaying in rent. I either want a check for $130,000 or I want a 30% increase in rent. And we had that exact case come across our desk just a couple weeks ago. Right? So bottom line is, don't leave yourself exposed. Help make sure that the lease becomes a great asset when it comes to the sale of the practice. And as you look for adding a new location or even buying your first, plan it all the way through. Right? Plan all the way through to the exit strategy, because you're about to invest far too much money not to be thinking about the exit. So at a high level, what should it do for you? If we could wave the magic wand, what would we want it to do? Well, for again, many of you that are looking to start or build a practice, first and foremost are to provide fair and affordable financial terms. What do I mean by that? Base rent, annual increases, tenant improvement allowance. Careful with that though, that could increase your rent. Landlord work, for example, as another component, right? What is the landlord willing to do for you? Right, as well as free rent and fixturing periods. These are all elements that you can do to help to reduce the overall upfront or ongoing cost. But look at that total cost of ownership, that total cost of commitment over the term. We also want long-term stability and security. We want to minimize risk and exposure. What do I mean by that? Each and every person on this call, I implore you to ensure that you have something called a death and disability clause. the death and disability clause at a very high level is in essence an early termination right. It states that my godfather wishes he had before he ended up having a disability in his right shoulder. But at its core, it is an ability to give yourself or your state the ability to exit if you're unable to practice wet finger dentistry. Right? Do not get lumped into the continuing obligation because your lease will follow through to your successors and heirs even after your passing. And this could be a major impact, as we had a terrible example of an office north of us that, in essence, 3 weeks prior to the grand opening, the doctor had passed away. Right? It created a nightmare scenario that we had a fully built-out practice without the ability, with no doctor and no patients. The practice was worth next to nothing, even though it was fully built out. And now the individual monthly payments, the life insurance is now having to go to pay towards the stupid lease payment, right, as the landlord's holding the family now accountable for the next 9.5 years. So be prudent as we look towards practicing and as we look towards the future and protecting yourself and your estate. So what's in that lease? Right, well, a couple of core components here, most importantly, is the option to renew clause. So for those of you looking to add a new location or buy their first practice, this becomes most relevant. Let's take 30 seconds to read what's in front of you today, which is in about 70% of your leases that hopefully you're following along with, and let's try to identify all the potential concerns. Let's take the next 10 seconds. All right, well, let's jump in. So what do we notice is the first main issue? Well, interestingly enough, it is personal to the original leasee. So provided Dr. Joe Black shall remain as tenant. That means that when you go to sell your practice, you need term. Bank of America, Royal Bank of Canada, you name it, any bank on the planet is going to require that if the doctor wants a 5 or 10-year payback period, there needs to be at least as much term on the lease. So the issue here is that these options are only good for you, which means when you go to sell your practice, if you're at year 9 and you have 2 5-year options left, for that new buyer, all they have is that last year. This is one of the #1 ways that the landlord has too much control and can completely enter into a new agreement with that new doctor, right? Or not have the term or give them the ability to kick you out, right, without that protection. So the goal is to make sure that the options are always transferable to the new buyer and that wording is provided appropriately. In addition to that, if the tenant duly and regularly pays its rent, and has performed its covenants and obligations under the lease and has not been in default. So many examples we get where the landlords find loopholes because there's another doctor or another larger space that wants to come in and take over that doctor's location, and the landlord, out of pure responsibility to their shareholders, it's not greed, it's just the business of being a for-profit organization, they're going to find a way to move you out and get that bigger tenant in to take over that space. Next one, this is interesting. Please, on your cell phones today, put in a calendar notice, not just for the expiry of the lease, but also for the option to renew deadline. If you have options, typically you need to give the landlord at least 9 months or 6 months or 12 months notice of your intention to stay or leave. Why? Because they want the ability to put up a for lease sign and get someone in before you leave. So very important that you're proactive with that. Do not miss that date or all your options become null and void. Also, even worse, right? If you renew your lease, here's what the landlord has snuck in. They have the ability and the right to be able to require you to go back to a current standard form lease. So you did a great job negotiating last time, but good news, the landlord can start from scratch every time and put whatever they want in front of you, right? Whatever rates, whatever standard forms, whatever new terms, major red flag. Also, as you can see, they're on the never never plan. So in no event shall it be less than the rent paid in the last year of the original term. And last but not least, right, we've seen some terrible examples of this, but in other sub-deals or otherwise, your rent is linked to other tenants. So their inability to negotiate or pay higher rents is a larger impact. So as you can see, one clause, major issues. In the essence of time, here's the other one if you're looking to sell or transition. Right? One single clause, major risks. Other traps in the lease agreement, these are just a few of the major issues that can have impacts of hundreds of thousands of dollars to your practice. As we look towards the renegotiation plan, this is an example of what the course that landlords go to training on to help learn how to negotiate against you, the practitioner. The first thing they teach is this tenant lease cycle. This is the leverage cycle. What it states at a high level is that for the landlord, and let me know if it's ever happened to you, you reach out to them 2 years in advance, and the landlord says, whoa, that's way too early. We're not ready to entertain any new renegotiations at this time. Call me in a year, right? You reach out in a year's time, suddenly now, oh no, it's busy, it's the summer, I'm golfing, oh no, circle back in a few months, we're waiting to see, etc. We then get into the 8-month range. Well, now we're coming up to the option to renew deadline, and we're starting to sweat, right? The option review deadline is at the 6-month period, right? Most often, right, the landlord will wait until after that period of time has elapsed, so your options to renew have become null and void, and therefore left you now in a pressure decision with 6 months or 3 months left without any options. So the takeaway, if there's one takeaway from today, doctors, please ensure that you are protecting yourself, right, and your family and your patients to make sure that you're not falling into this trap. Start negotiating and renegotiating 18 months plus for a new start or 24 months in advance for a lease renewal. So as we transition, as I promised I would be right bang on for time for Adrienne, right, what we want to do here is be able to assist. So in appreciation of everyone's time, we're offering a complimentary lease review, which is purely focused on helping our team do the analysis of both your local rents, vacancies, building report, etc., as well as go through the full lease agreement to highlight and identify any potential concerns, just like the two we briefly touched on today. We're happy to offer that to all on the call. There'll be a quick button that will pop up here momentarily and again at the end, but in essence, very important that if you have not had your lease professionally reviewed, I would strongly suggest that you do so to help ensure that you are protecting yourself and others. I will quickly pull that up now so we capture that. So in the upper left-hand corner, as well as if you want to update for those that joined a little bit late, this will be helpful for Adrienne's component here in a moment. Please update what stage in the career you're at, buying the first practice, adding a new location, renewing your lease, right? As well as for those that are interested in a complimentary lease review. Our team will follow up with you to pull up your individual, any additional riders, exhibits, documentation, etc., right? As well as helping to make sure that you're aware of what's in the lease agreement, as well as understanding what the range of success can be in your upcoming negotiations as well. We'll take one extra quick minute to capture this, and then we'll pass on to our fantastic guest speaker here at the turn of the half hour. Give it another 5 or 6 seconds, and then we'll transition. Perfect. Great. Thank you so much for everyone's time. Greatly appreciated. And now it is my true extreme pleasure and honor, as we've spoken many times in the past and lectured together, we're in for a great treat. We're going to see a lot of information regarding some general key strategies, which is effective regardless of the corner of the globe that you're on, but also going through some core components regarding the common HR and compliance mistakes that happen throughout the dental practice, especially throughout the entire United States of America. So it is my privilege to introduce Adrienne. Adrienne is an HR and employment compliance specialist with Ericksen and Associates. She provides incredible education programs, training, and human resource services to dental professionals across the country. She's presented all the way through from dental students all the way through to transitioning doctors, let that be at Vanderbilt, University of Tennessee, at Knoxville and Memphis, right, University of Alabama, University of Louisville, as well as dental schools and colleges in Indiana School of Dentistry. Why? Because there is still such a massive decrease or lack of the business side of dentistry training. And God bless all of you that you're graduating from dental schools, you're jumping in and starting running your own business with little to no business experience whatsoever, let alone HR compliance, how to fire, how to hire, employment agreements, and beyond. So it is my true privilege and honor to introduce the Adrienne Twigg. Adrienne, over to you.
Wow, thanks, Eric. Man, can you just travel with me and do that? That's awesome.
I thought I did.
Yeah, that's true. That's true. Yeah, thank you so much for the opportunity. Eric, your presentation on office leases, I always find it fascinating, and every time I hear you, I always pick up something new. So wonderful job. Thank you again for the opportunity to be here and to participate in this webinar. A little bit of background about myself. I managed a very large solo group practice in the Midwest for almost 18 years. And I wish we had known some of the things, Eric, that you talked about. It would have made things a lot simpler for us as we navigated those waters. Now I am a co-owner of Ericksen and Associates, and we deal with the employment compliance issues that as dentists you have to face and have to comply with to run your business and to protect that very, very important asset, which is your practice. So we're going to dive in and just merely scratch the surface of some of the HR mistakes that are out there and that you may find yourself in, and more importantly, how you can avoid those issues. We're going to talk about employment compliance, and for those of you who may not be aware of all the employment laws that are out there, you are hit with those immediately when you open the door to your dental practice. And it doesn't matter if you have 1 employee or if you have 100 employees. These employment laws and regulations fall directly into your lap. So really all it takes is 1 employee, and you are looking down the barrel of all these laws and regulations. And then what you need to know is there are 2 sets of laws that you have to abide by. There are the federal employment laws and regulations, and then there are also the state laws and regulations. And one of the challenges is that some of them are not the same. You've got a federal law that may require you to do this, but then a state law may require you to do something different. So you may say, okay, well, Adrienne, I don't even know the laws. But if I were to know them and the federal law and the state law is different, which law am I supposed to abide by? Well, that is a very easy answer. The law that you have to abide by when federal and state laws differ is the law that's the most stringent. And if you say, okay, well, how do I determine which law is the most stringent? That's a very simple answer. You have to abide by the law that most favors the employee. So if the federal law favors the employee the most, that's your go-to, versus if the state law does, then the state law is your go-to. Well, there's another challenge that's kind of pops up in all this, and the challenge for that is the laws are always changing. So you have to really stay in tune or have someone on your team that is staying in tune to keep up with things that are going on in employment compliance. So let's talk about one of the first common mistakes that we see. It's failure to comply with your wage and hour rules. So if we take a look at a question that we get asked quite often, and that is, if I pay a staff person a salary, I don't have to pay them overtime. And we get this question a lot because dentists across the country will think, oh, I'm going to put my office manager on salary, and when I do that, then no matter if she works over 40 hours a week, which office managers tend to do sometimes with everything they have to do and take care of, well, if he works over 40 hours a week, then I don't have to pay overtime because they're on salary. Well, actually, this is absolutely false. It's a myth that's been out there for a long time. But what you need to understand is the method of which you compensate that employee does not matter on whether or not they are eligible for overtime. That myth has been out there for a long time. But what I want us to look at and what I want to explain to you, that an employee, if they are on a salary but they are not considered exempt from overtime, that means that you still have to pay them an overtime wage. Well, what do I mean exempt versus non-exempt? If an employee is an exempt employee, that means they have a high-level job position. And I have to tell you, probably 95% of all the dental employees out there are non-exempt. An exempt employee there's a specific job duties test that the IRS and the government puts into place. It's a criteria that you have to live by. Only high-level positions in management or a supervisory position would be considered exempt. Certainly, if you have a practice administrator who is in charge of all the hiring and firing, and he or she has say-so over the hiring and firing, if they have direct input in the financial duties and responsibilities, obligations of the practice, and if they have a team that they are supervising, those might fall into an exempt status, but the criteria is so strict that it's very rare to find someone that really falls into that exempt category. So, like I said, you really need to look and make sure that you're categorizing your employees correctly, and that if you are paying them a salary and they are still considered non-exempt, which means if they go over that 40 hours a week, then you do have to pay them time and a half for that. We also, let me back up a bit, we also get questions about having a 1099 employee. For instance, if you have a hygiene sub that comes in and works 1 day a week or 2 days a month or whatever, and you say, oh, I'm just going to pay the hygiene sub as a 1099 employee. Well, the government, once again, has very strict criteria about that. For instance, a 1099 person or a subcontractor has to own their own business. They have to invoice you. They have to supply their own equipment. And right off the bat, that knocks out your hygienist, because I don't know too many hygienists that will carry around a dental chair and a dental light and all of the things that he or she needs to do the hygiene duty. So once again, be very careful if you are paying someone as a subcontractor, as a 1099 employee. The government has cracked down on this quite a bit and are auditing a lot more often than they used to. So just be aware of that issue. Most of our federal and state laws fall under the 40 hours per week for overtime. There are some states that have an 8-hour-a-day. California is one. California is probably the toughest state in the United States to be an employer in, because their laws are very, very strict. So California is definitely a law that has anything over 8 hours a day is considered overtime. So you need to make sure that whatever state that you're in, you're abiding by those overtime laws. And most of these are 40 hours per week. It's not per pay period. So if you pay biweekly, and if you have 40 hours in 1 week, or let's say 36 hours in 1 week, and then the employee works 44 hours the second week of your pay period, you're thinking, oh, well, it's 80 hours for the pay period, so I'm okay. Well, that's not how the government and how the IRS looks at it. It's 40 hours per week. So that 36-hour week is fine, but the 44-hour week, you have to pay the 40 hours regular and then the 4 hours overtime at time and a half. So please be aware that that's another thing you have to look at. Continuing education. Continuing education is probably one of the biggest sticky wickets in employment compliance that's out there. At the end of this webinar, if you would like to contact me by email and request a summary sheet for the information on how to correctly pay for continuing education hours, I'll be more than happy to send that to you. It goes through, there are things that you have to pay, such as travel time. There is a form that we use, which is called a different capacity work rate form, so that if you have a hygienist that is going to attend a continuing education class and you have asked her to go and to attend this, instead of paying her maybe $50 an hour, her normal rate, or whatever her normal rate would be, you can negotiate with the hygienist and say, okay, instead of paying you $50 an hour to go sit in an 8-hour course, I'm going to pay you $25 an hour. Once again, this is something that has to be negotiated before the event occurs. We recommend that you get it in writing so that there's no misunderstanding. After the event is over, the hygienist receives her paycheck, and she's expecting to be paid $50 an hour for that 8 hours, and she realizes that she's only getting $25, you have it in writing that that was the agreed upon rate. So anytime you have a member, a team member that is attending CE, they're going to be on the clock. So that is an issue that gets dentists in hot water a lot of times. There's misunderstandings that happen with that. The government comes down really hard and harsh if there are hours like that that are not compensated. And we have a lot of clients that are wonderful with their staff, as I'm sure all of you are. You want your staff to continue to learn. You want them to go to CE events. So you encourage them to do that. Whether it's the Hinman meeting, the Midwinter meeting in Chicago, the New York meeting, the California Dental Association meetings. You want your staff and your team to go and continue to learn and to grow, and maybe you take them, you provide the transportation, you fly them to these meetings. You put them in nice hotels, maybe you take them out for nice dinners, but you don't compensate them for the hours that they spend in the CE lectures itself, because they are thinking, well, this is kind of a mini vacation. I get to go to Chicago, or I get to go to Atlanta or California. So they're fine with that. They think, well, it's great. It's kind of a team retreat. But the government doesn't view it like sometimes we do. The government says, we don't really care that you fly them there. We don't care that you put them up in a nice hotel or that you buy them a nice dinner. What we want to see is that you're reimbursing them or you're compensating them for the time that they spend in class. And that is because they don't get tax money for the airfare and for the dinners and for the hotel. Where the government collects their money from you, the employer, is from payroll taxes. So they want to see that you're paying them to sit through that meeting, that educational seminar. So this is kind of where the government will put the hammer down on us employers. They want us to make sure that we are paying for those hours spent in class. So continuing education it can be a real bear to make sure that you're following all of the rules with that. So then the next thing out there is comp time. We have been asked a lot about, well, if I have a staff member that goes over the 40 hours, can I just give him or her comp time? Well, unfortunately, that's not permitted in the private sector. It is in government jobs. They allow government employees to take off comp time if they have worked overtime, just to kind of balance that out. But in the private sector, they don't allow you to do that. Even if the employee says, oh, I know I worked 2 hours over this week, but I'll just take 2 hours off next week, that's fine. Well, the government doesn't allow you to do that, so you need to be aware of that. Another thing you need to watch out for is making sure that you have records of the time that has been worked. Even if someone is on salary, they still should be keeping time worked records. This goes to part of defending the practice, protecting the asset. If you're ever called into question about how someone was paid, you have the record there to help defend yourself. So the second mistake that we see a lot of is failure to follow discrimination and harassment policies. These take many forms and can go down a whole lot of different paths. But let's look at just a few of them. In the early 60s, you may remember, anti-discrimination laws were put into place. They were put into place under the Title VII Act. And Title VII really immediately dealt with, you cannot discriminate against someone based on their sex, race, color, national origin, or religion. Well, these are by no means the only part of the anti-discrimination law that was put into place, but these are really the cornerstones that came into place in the early 60s. Not long after that, there was something put into place called the Pregnancy Discrimination Act, that you cannot discriminate against an employee, fire an employee, simply because they're pregnant. Soon followed the Americans with Disabilities Act, which has a very large logbook of how you need to deal with an employee that has a perceived or a diagnosed disability. Equal Pay Act came into effect, Older Workers Benefit Protection. Age Discrimination and Employment Act came into play. And just as a side note, the age now for age discrimination in the workplace is, are you ready? 40 years of age. So anyone that is 40 years old or over would fall into what we call protected classes. And if they are terminated and they feel like they have been terminated unfairly, unjustly, they would fall in the protected class under age discrimination. So you need to be aware of that if and when you are terminating employees, that is a class that may pop up and that you may be questioned about. So you can't fire someone because they associate with someone maybe that you don't like. That is another protected class. Or retaliation for whistleblowing. So this came into play after the tobacco industries were turned in by employees, and back in the early 70s, the whistleblower thing came into effect. So that's just another area that you need to be aware of. And harassment, whether it is sexual, whether it is hostile work environment, harassment, as we have seen in the news over the last couple of years, has really become another hot topic that you need to be aware of. So all of these different categories and areas are considered protected classes. So as you go through your dental career and you have employees that you're dealing with, please know that these issues come up and that you need to be getting good, solid advice if you are taking the step to terminate or remove an employee. You need to be aware of all of these things before you go into motion to deal with that in whatever manner you're choosing, whether it's discipline or termination. The third common mistake that we find is failure to handle those disabilities and pregnancy issues correctly. You know, there are a lot of women in the dental field, and of those women, I would say probably 98% of the dental field is women, and of those women, there's a very big percentage that are of childbearing age. So the pregnancy issue is really a hot topic as well. So one of the things that we talk about a lot is that, did you know that following pregnancy leave that you must extend breastfeeding rights? So this is one of the questions we pose in the seminars that we do. Did you know that you have to extend breastfeeding rights, and what is the correct answer? Well, we could sit here for a minute and let you kind of think about this, but I'll give you a clue. The answer is actually C. Regardless of the number of employees that you have, you are now required to extend breastfeeding rights. So if you have an employee that's gone out on maternity leave and comes back and she is breastfeeding, you have to give her the option to, if she needs to excuse herself to go pump and express milk, then you have to not only give her the time to do it, but you also have to provide a private space that she will be able to pump and express milk. So you have to give her the time, you have to give her the private space, and it has to be somewhere other than the bathroom stall. And you have to do it for up to a year after she returns from having the baby. So as you can see, this can put some chinks in your schedule, but just know that when you give them the break time to do this, it doesn't have to be paid time. So if they're going to take a break for 10 or 15 minutes to go and to pump in the private space that you have provided for them, this is not time spent on the clock, so they would clock out for that. That may help you a bit. So when someone comes to you and tells you, hey, doctor, this is wonderful news, I just found out I'm pregnant. So, and you're kind of processing that, the very first thing you should say is, congratulations, not the thing that's floating around in your head, such as, oh my gosh, now what am I going to do? How am I going to handle this? Because she's going to have to be out on maternity leave. No. The very first thing that should pop out of your mouth is, congratulations. And then you look at what should the process be for working through the pregnancy while this person is out. Well, if the pregnant employee, raises no concerns or issues about her job, then just confirm the plans. Does she plan to come back to work? When is the due date? Talk about leave of absence, how long she intends to be out. Get some paperwork done. Get something in writing about her leaving date, when she intends to return. Get a medical certification from her doctor that she's good to go, that there isn't any accommodations needed. The employee takes the leave. You've got everything written down. The employee has the baby, does the leave, returns. You get a medical release from the doctor saying that she's good to go, and you're set. Now, on the other side, if you have the employee that comes to you and says that she has some issues or concerns about her job, maybe it's a dental assistant that is concerned about being around nitrous, although we are told that there should be no concerns. But if there is, or maybe about taking x-rays, then you go down the same path. You give the employee her job description to take to the physician, which means that the employee has to actually have a job description. Take it to the physician, have the physician review it, and see if there are any accommodations that they would like for you to make. If there are, you work with them to do that. You then confirm plans, the due date, find out where she is on the leave of absence, how long she's thinking. You get the paperwork. The employee takes the leave of absence. You, once again, get medical certification that she can come back, and then you're set to go. Sometimes it can be tricky if they do need an accommodation. The government expects you to do that if it's at all possible. So you just have to work with them to get through that. So these are the three common mistakes that we see: the wage and hour rules, following discrimination and harassment policies, and the failure to handle the pregnancy and the disability issues that are there. That's why it's very, very important that you have a policy manual that is current, up to date, and that really identifies the policies, how you handle everything from discrimination or harassment issues that may appear, to how you handle overtime, to even down to cell phone use. And then you also have in the policy manual, you have all of your benefits laid out. You have how they accrue vacation, and if you pay for holidays, anything about sick leave that they need to know. So you have all of these policies well defined and written out for your employees. Well, why do we want you to have policy manuals? Well, all of these things should go into your policy manual, and it really should establish what the rules and the expectations are for your practice. It gives you a guide to treat people consistently so that you can stay out of the hot water of discrimination and making sure that you're complying with all of the state and federal laws. And most importantly, it will simplify your life down to one sentence, 5 words. Go look in the manual. If someone comes to you and asks a question about, well, did we get paid for 4th of July this year? It's on a Wednesday. You just say, go look in the manual. So in summary, the game really has changed. And today's marketplace has become a minefield that can explode in your face if you're not prepared to meet all of these regulations and the rules. So today, a dentist is more likely to be sued for a labor-related issue than a malpractice issue. There are insurance policies out there, employment practices, liability insurance, to help protect you, but you have to have a policy manual that is in compliance before you can even get one of those policies. And just so you know, the average out-of-court settlement today for a labor issue is about $25,000. So we're going to skim through this very quickly so that I'm not running over. So this is a question to ask yourself. Given what you've learned today, how would you rate your level of compliance? Everybody may have a different answer. There's no right or wrong. But some of you may be thinking, oh, I need some help, and I could definitely benefit from some improvement. So just remember that you really do need to take steps to protect your asset, which is your practice, and to minimize any liability that's out there. So to do that, you really need to act. You need to have some awareness of the rules, regulations, and then you have to have a commitment to take action to make sure that you are in compliance and that you are covered. So once again, our company is, as Eric said, Bent, Ericksen and Associates, and we are here to answer questions, to help you Like I said before, if you would like for me to send you the CE summary with the rules and regulations on how to pay, I'll be happy to do that. You can just email me at this email address, and I'll be happy to help you. Eric, I'll turn it back to you. Thank you so much.
Perfect. Thank you so much, Adrienne. Always very informative and always a great reminder as to regulations are always changing. And if you haven't, everyone should see the polling questions up there now for more information for Adrienne. But if you haven't been updated, no different. If you haven't had your lease, professionally reviewed, or you haven't had your policy manual in place or updated, or it's on a shelf somewhere, we did it 10 years ago when we opened the practice, definitely it's not worth the risk is the core theme today, is to be prepared, and it's either a proactive investment or a reactive cost. And in this day and age and in this climate where information is everywhere and online reviews and employee reviews and whatnot, the best thing that you can do as an employer is to make sure that you're proactive, you assemble your proper professional team, right, and you go to bed at night knowing that you have the information, you've partnered with the right firms, and you're taking the first steps to help to protect yourself. Nobody wants it to rain, right, but rain does happen from time to time, as I'm sure we can all attest. So the takeaway from today is let it be Cirrus involved with your lease agreement and real estate, right, or Ericksen with your policy manuals and HR compliance, and just answering the tough questions of, hey, I've got this employee, I'm trying to make some moves, it's being a huge impact on the culture, what do I do? And they're a fantastic resource for you. So we'll close the polls here in just a few seconds. We want to be very respectful of everyone's time as we finish off here at 10 a.m. Pacific, 1 p.m. Eastern. We certainly appreciate everyone's time here today, greatly appreciated. Let us know if there's any Q&A, if there's any specific questions, happy to answer those as we look at again, from your perspectives, your specific situations. Let me pull up everyone's contact information again. So here's all my direct confirmation emails, as well as Adrienne's emails, phone numbers, etc. We're happy to have, an initial review call as a complimentary component and helping to get a better understanding for your specific situation or your individual practice or your group, and to see if there's something we can do to help assist. So on that note, greatly appreciated. As promised, I will put the polling question back up one more time here regarding the complimentary lease review. Everyone should see it in front of them now. For anyone else that would like some additional lease reviews or some more information regarding a rental rate analysis, we're happy to pull that up for you. We're happy to schedule a call, either myself or some of our senior consultants, to help ensure that you're taking your first step to being aware of your roles and responsibilities as a tenant, as well as how much the landlord has and how much control the landlord has as we look to that as well. And also for the CE credits, we will be reaching out with those as well, and lots of ability to click on that. That's now open as well. Great. Well, thank you so much for everyone's time. Greatly appreciated. Hopefully you all get some good value out of today's webinar. We look forward to working closely with each of you, and we'll follow up. If anyone would like an additional recording of the webinar, happy to provide that as well. Adrienne, thank you so much for your time. Looking forward to seeing you in person at some point in the very near future. And thank you for joining us today.
Absolutely. I enjoyed it. Thank you so much.
Perfect. Thanks, everybody. Have a great day.
Goodbye.